Hey, y'all. This is RJ, Riode Felix from Compass Real Estate. Here to talk to you guys about Q&As, right, of real estate and the process overall. I have Liz, attorney extraordinaire, and Sofia, lender of the best. Um, First question for Sofia. What do you think about closing costs, and how much do you typically pay for closing costs?
Sure. Thank you, RJ, for having me on. My name is Sofia with Mortgage Network. We're a local direct lender here in the Boston area. As far as closing costs, I always tell buyers they should anticipate to have above and beyond their down payment about 1 to 1.5% of the purchase price. So if you're buying a house for $300,000, it's probably going to be around $5,000. So you want to make sure you have that above and beyond the down payment. And those closing costs aren't due until the day of your closing. So if you're not closing on a house for, let's say, 45 days or 30 days later, they're not due until at the end of the closing. So you definitely want to talk to your real estate agent in advance and also your lender that you're working with to make sure that you have enough of those assets ahead of time before looking for a house. So you know exactly, what your total output's going to be when you're looking for a home and how much cash you're going to need. So it's really important to have that upfront so that you can feel comfortable, to make an offer on something. So closing costs is something that a lot of people forget about above and beyond, the down payment. And one thing to tell you, RJ, that a lot of people are starting to hear about, and I think more in this year in 2021, we're going to have a lot more a down payment assistance programs coming.
Nice.
So right now there is a down payment assistance program through Mass Housing.
Okay.
And you can get up to $15,000 in a down payment or 5% down, whichever is less.
That's awesome.
Yeah, so I think that's a good thing to know for your buyers. So if anybody has questions, it's something that you want to steer them to their lender to see if they qualify for those programs. All right.
Totally, I'll keep that in mind. Next question for boss lady Liz.
Go shoot.
All right. So what is title insurance?
Good question. So thanks for having me, RJ. I am Liz Barletta. I am a real estate attorney with Ligris and Associates. And title insurance is one of those questions that everybody, as soon as they get their loan estimate from Sofia, they're calling, what is this? There are two different line items that say title insurance. What is this all about? So essentially title insurance is, there are two kinds. There's lender's title insurance. So if you are getting a mortgage, your lender will require a title insurance policy to protect them up to the amount of the loan. However, that doesn't offer the home buyer any protection whatsoever. So it's what the other type of title insurance that would protect a home buyer is called owner's title insurance. So that title insurance policy is not a requirement. It's an optional policy because the lender can't force you to get protection for yourself. They only force to have protections for them in that case. But like I said, there's zero protection for a homeowner with that lender's policy, even though you're paying for it through your costs. So it's so important to have your own protection. This is the biggest, arguably, purchase in your entire life, and to not have a title insurance policy to protect you for unforeseeable things. For example, some people think, oh, well, if something wasn't caught in the title, well, that's a malpractice, I'll just sue you. I'm like, okay, that's fair enough. But what the title insurance covers is stuff that's undiscoverable. So if it's undiscoverable, I couldn't have discovered it. So I didn't commit malpractice, for example. So it's not something that, I'm a real estate attorney. This is what I do every single day of my life. And I purchased it when I bought my homes. It's one of those things that's also, to some, has sticker shock. It's one of those costs that's not necessarily little. But the beauty of title insurance for the owner's policy is you buy it once and you never have to buy it again for yourself. So if you've owned the home for 50 years and then sell it when you're about to retire and move down to sunny Florida, you're not going to have to buy that title insurance policy, for the owner's policy, I should say, ever again during that 50-year time you're living there. So that's really beneficial. But really, to kind of take a step back, I think really for the home buyers out there, I feel like they're all like, where do I start? How do I start? Obviously getting involved with with Sofia and potentially the loan process. Sophia, can you chat about that? Like, what does it take to get pre-approved, and what's a pre-approval, what's a pre-qualification? I feel like that's a lot of questions that we hear, and how to really get the ball rolling.
Yeah, thank you, Liz. And also that title insurance that we were talking about, that's part of those closing costs I was saying at the beginning. So we will, as a lender, you should always get what a combination of all those fees in the beginning, and that those will be included. Even the optional insurance we included in the total closing costs, and then you can of course choose not to get it or not. So as far as pre-approval, it's super important to get your loan, to talk to a loan officer early, especially in this market, the way that it's so fast paced, and having to find your dream home on a Sunday afternoon and not being prepared on what you can qualify for, what type of program you qualify for, is super important. The difference between a pre-qualification and a pre-approval is a little bit, as for the buyers, it's so confusing. What I can tell you is, we actually tried to change the name of it completely, and we call it a home buyer analysis because it's so confusing. You definitely want to talk to a lender that is going to check your credit, run your loan through what's called a decision engine, and has really taken the time to see what programs you're approved for and what you qualify for. I can't tell you how many times I have received somebody that has had accepted offer that did an online approval with some of these larger Rocket Mortgage. And what happens is they're not really thoroughly being approved. So pre-qualification would be somebody that's just really doing an online application. No human is looking at your details. You really want someone that has done all those items, pulled your credit, checked your income, and run your loan through a decision engine. And that's technically a pre-approval. So definitely you want somebody that has really looked at it and given you all of your loan options. So that's what I can tell you. Try to use somebody that's a local lender and that has really looked over your needs and wants as a buyer. And then you can feel confident to have that letter to give to RJ to start looking for a home. So I think RJ, one of the biggest things that a lot of buyers, after I approve them, I think that the approving part right now is maybe the easiest part. I think finding a house is harder. What do you think?
Yeah, I mean, finding a house right now it's tough. The market right now is super competitive when it comes down to condos in the city, or even single families in the suburbs, right? So most people are trying to get out of the city and get themselves a single family home because most people are working from home. They're looking for big backyards and their own space so they can walk and relax and play around with the kids. So the competition in the suburbs is getting out of control for the most part. And then within the city itself, for the most part, most people are trying to buy condos for investment properties or so forth, and cover their bases for potentially having an investment property.
Sounds good. Do you think it's bad?
Yeah.
Do you think it's, it's a personal question. Do you think that buying something like a condo downtown is a bad investment right now? Or do you think it's just, do you think you would still look to buy something in the city?
Yeah, like I tell a lot of buyers that are looking in the city, it's a good time to buy now because you'll probably get more bang for your buck at this point in time.
Yeah, I totally agree. I feel like there's been so much competition, like you said, in the suburbs, and the city hasn't gotten as much crazy, multiple offer situations like we've seen in the past. And it's such a good opportunity. I've heard of a lot of buyers saying not only a combination of, potentially people wanting to be more outside of the city, but also with the rates being so low, things that they would have never been able to, even go to see, now they're able to actually qualify and potentially win that offer, which is huge. On that sort of token, I feel like one little story just to add to it, talking to Sofia early is so crucial and important, because there's so many buyers out there who unfortunately, like you said, go to maybe those 1-800 loan banks and don't have somebody who's actually looking at their stuff, and then get so disappointed when they maybe even win an offer and then won't be able to qualify. I had a client who came to me after on his second time around, and he was telling me how in this the first time he bought a home, he was pre-qualified. Nobody looked at his income. He ended up, working for himself and had, on his taxes, done a lot of deductions and so forth. So what was on paper, whatever, it was an income-based issue that was discovered like a week before closing. He's already told his landlord that he's leaving. He, all these different things a week before when the commitment was due, something that could have been discovered early on in the process, completely derailed it, affected the sellers who were also buying something else. It's just a mess. And not to mention just the waste of time and the feeling for that buyer to recover from that, and that fear of then that happening again, where literally if it would have been a conversation with you, that wouldn't have happened. Like, it's who you work with matters like so much in this.
Yeah, reputation goes a long way, and knowing the right people goes even further.
Absolutely. And RJ, so I feel like home buyers out there, I want to get started. How do I start? What do I do? How do I get in touch with you? Like, what do you do for the buyer? Just maybe talk about that.
Yeah, most of the time when I'm meeting up with a client, I meet them at a cafe, or nowadays I do a Zoom call, right? So now we're doing like a face-to-face, doing Zoom or Blue Jeans or whatever the case may be. And, I just listen. Like, I ask a question. I want to know what neighborhoods you guys are interested in, how many bedrooms, how many bathrooms, do you want to be in the city? Do you want to be in the suburbs? Is schools very important to you? Do you need parking? So I go through a number of different questions, and I just sit down and just listen. Once I get a full understanding, then, we start touring and looking at properties, and try to figure out, the bells and whistles, right? Pros and cons. And we basically start rating the properties that we saw, right? So anything above a 7, I say, all right, that's definitely something to reference later on. And if we're interested in putting up an offer on it, then my job is to look at comps and look at what's sold in the area and figure out the numbers from there.
Awesome.
Yep.
And then so obviously things are really competitive right now. What have you seen people sort of do, and what does it mean to do certain things to get maybe an offer accepted? You want to talk about that?
Yeah, there's like so many different ways to keep your offer competitive, especially if there's an offer deadline. My job at that point in time is to have a conversation with the seller agent and see what the competition is like. So if there's an offer deadline and I'm able to see if there's like 5 offers on this particular property, single family, condo, or even a multifamily, because I've done them all, I give that information to the buyer and I say, hey, they have 5 offers on the property. Out of the 5, 4 have waived their home inspection. 3 are 20% down. Maybe there's one that has a cash offer. So I try to get as much information so that way we can tweak our offer to present it and be a little bit more competitive. Meaning we might want to waive the home inspection, maybe put more down payment on the earnest check. Instead of putting 1,000 down, we might be able to put like 5 or 10K down. Maybe have a conversation about waiving the mortgage contingency if the lender is comfortable with that. Sofia.
We need to check that. Yeah.
Yeah. Because I never offer that as an option unless I hear from the seller agent like, hey, some of the offers have waived the mortgage contingency. So I say to the buyer, of course, you might want to have a conversation with your lender. If the lender feels comfortable with it, then we might want to try that. There's also another thing with the escalation clause, meaning we have a base number and then we have a max number. And any offer that falls in between those numbers, we can escalate over it by a certain amount of money. So there's a number of different ways to have your offer be competitive in this market.
And
Awesome.
What about a waiving, like going above the appraised value, the asking price of the house? So let's say the house is, listed for 500 and they're telling me there's 20 offers and it's going for like 550. What do you, is obviously looking at the comps is probably the biggest thing to look at.
Yeah, if we are in a situation where we're thinking about waiving the appraisal, there's different variations of the appraisal, right? So if we are thinking about waiving the appraisal, then I'm looking at the comps to see if there's any sort of justification for waiving the appraisal, right? That's one option. The second option is covering, say, a monetary amount if there is a low appraisal, right? So like that might be a different scenario that comes into play where we offer 500,000, but the appraisal comes in at 490. But because we say, hey, you know, buyers are open to a 10K if there's a low appraisal, then the buyers have that monetary amount in their savings account to cover the 10,000.
Right, and that's what I have to tell you that I think I'm seeing that more and more. I've had probably, I would say just this month alone, one that was 70 above asking and one that was 50 above asking.
Wow.
The appraisal came in on both of them a little bit low, which we expected. We knew there'd be a small gap. Your the same example, the buyer did have in there, if the appraisal came in at a certain cap, then they would cover the difference. In this case, it was exactly 10,000. The appraisal was 735 and the price was 745. So they were putting enough money down, believe it or not. So they were putting 10% down only. So you don't need 20% down in these scenarios. People think, oh, I need to put 20% down.
I was going to ask you that, like how much?
Yeah, you don't need to put 20% down. Even if you have a little flexibility there with even 10% down, they were still able to borrow the same amount from the bank, even though the appraisal came in low. It just affected what's called their loan to value. So now instead of putting 10% down, they were actually putting 8%. You know, but they were borrowing the same amount. It didn't actually affect their pocket and anything. And believe it or not, even the PMI was the exact same. So you really definitely want to talk to your lender in advance when you're in a situation, when you have buyers, let's say in that situation where they want to waive the appraisal or look at, you know, possibly a shortage of the appraisal. Like, you know, it might come in short with the comps. Definitely talk to the lender so that with the buyer, you can talk to them and say, okay, if I have this much in my bank account, worst case scenario, if the appraisal came in at this amount, what different scenarios would I have, scenario A, B, and C, and happy to walk that through with the clients so that they feel comfortable, you know, and they're not shocked when the appraisal comes in a little bit shy. Because I think until we get to the spring and there's a curve and there's more comparables, because for everybody out there, when we're talking about comparables, it's the bank's appraiser is going to go back about 3 to 6 months on what has sold. So if you're buying a house now, we're going to be looking at comparables in January, December, November, October, which the sales weren't as high, let's say, in that time frame. So as the spring market continues and you're seeing more and more sales, then the comps will catch up. But around this time of year, it happens a little bit until it can catch up with the market. So definitely it takes, again, a good team, a good real estate agent, a good attorney can help us. I mean, Liz, what if an appraisal comes in low? What do you do on your side if that hasn't been talked about in advance with a buyer?
So when we represent a buyer, we always have that conversation because it's more than anything, it's about expectation setting. I think in every, you know, and all of this stuff, what we're doing here, we're like informing people, you know, knowledge is power. So trying to keep everybody sort of at this sort of level of expectation setting and understanding what the different parts of a transaction are. So if you know that this is something that's potentially a possibility, and generally that's because, you know, RJ, like he said, when he's adjusting for pricing or looking at pricing, he's doing his own comparable search. So he probably has really good intel to know whether something's going to appraise or not. And so having that information from the beginning is huge because then we can talk to the client and have that sort of conversation. More and more, depending on who sort of the lender is in their process, and maybe you can speak to this too, Sophia, depending on how much you're putting down. Before we used to say, you know, there's a specific loan amount in the mortgage contingency clause, but as you advised, if you have a client who can still qualify for that loan amount, but putting less money down, you're not necessarily going to be denied. And so what the mortgage contingency clause provides is that it protects you if you're denied. So you have to have that conversation with your team beforehand if it's a situation where it's likely not going to appraise. So that way, you know, okay, I still may be not forced, but I still may have to basically pay what an appraiser said it wasn't worth. And at the end of the day, the majority of people out there, they're totally cool with it because their offer got finally accepted after like 10 different offers at other places that got rejected. So, but at the end of the day, we can't presume who our client is. And so it's so important to have them understand the potential possibilities. Whereas back in the day, like 2 years ago, you know, one would, if the property didn't appraise, it was like an automatic denial. That's not really the case anymore. And I really don't know what adjusted, or it just became more of the norm to be able to find, maybe you can speak to that, Sophia, but so there is that sort of belief out there that if it doesn't appraise, that you automatically have an out with the contingency clause, but that's not the case if you can still qualify. That's
exactly right. And that's where a lot of, especially for people that are putting, like, let's say 20% down. If that appraisal at all comes in lower and you're putting something like 20% down, it does not mean that you're automatically denied. So definitely need to have a conversation with the bank and your agent, knowing in advance that if that comes in and you're not comfortable with that, you need to make sure that if you weren't planning on buying the property, if it didn't appraise for a certain amount, that really should be written in advance.
And that's what I was going to add that in. So like usually in my offers, in the addendum part of the offer, it says subject to appraisal coming in at list price or above, right? So that covers all bases when it comes down to that part. Because
and we always
go ahead.
Yeah, sorry. No, when we always, as the attorney, even if it's not necessarily in the offer, we try and add it in. Almost always it gets stricken by the seller's side because they're like, it's not in the offer. And we're like, darn, we tried. But that's not necessarily, at the end of the day, if that's, like you said, Sophia, a pain point for you as a buyer, and you don't want to, you have to have that conversation with RJ in advance and make sure that he's aware of that so he can make it a contingency. And you have to understand that could affect the likelihood of your offer getting accepted too.
And even with the like 20% down, with the subject to appraisal coming in at list price or above, if you didn't have that in there, I'm assuming, Sophia, the loan can still be rolled in, right?
Correct. Yes.
Right. Yes. So I guess my question to you, Sophia, is if it's less than, so say if you put in 10% down or 5% down, are you covered with the appraisal contingency at that point in time? Or
not necessarily, because the difference could be very little, right? So if you're putting 10% down, in that case, with the $10,000 difference, they still were qualified. Now it'd be more with somebody putting less than, let's say, like a 3% down.
Okay.
Or if they're even 5%, but the gap was like very large, right? So then that way, then they would technically be denied for the loan, because you can't force anybody to put the extra cash down. But if they literally, because of the appraised value, don't qualify, that's the only reason for a denial.
So what you're saying to me is always have that clause in there.
Yeah.
If they're putting, and if they qualify, yes, I would always put it in there. Yeah, if they're concerned about the appraised value, yes.
Yeah. Because some buyers out there, they don't care. They're like, you know what, it will protect me if it's like totally off, like $100,000 difference or something like that. But so long as it's pretty reasonable, especially with like that look back period you were talking about, Sophia, if you're buying now, there may not be comps, but we know that down the street, there's another house that just got on the market for a similar price, but it doesn't help the appraiser to make their valuation. Yeah. Awesome. And RJ, so I think a lot of clients, they also talk about like, okay, we go through this whole process, we get an offer accepted, P&S, all that fun stuff, you know, do we ever get to check out the house again? Is there, there's the final walkthrough? What happens? If you want to talk about that, maybe.
Yeah, I mean, typically within the purchase and sales agreement, which is drafted by the attorney, so I know Liz will follow up on that afterwards. I mean, that would be my question to you. But within the purchase and sales agreement, there should be at least 3 to 4 visits that the buyer has to go back into the property to do measurements or contract visits, or even the appraiser gets a chance to go in there just to appraise the property. So yeah, I mean, to answer the question, yes, they do have a number of different times to go into the property, including the final walkthrough, which typically the final walkthrough is right before the closing, where they have the right to look at the property to make sure that everything is A-okay, there's no issues. And to be honest, I think the final walkthrough, to me, is more important than the closing, even though everybody wants to get to the closing. but the final walkthrough basically puts the buyer in a position where, okay, if there's something wrong with the house, like there's a hole in the wall that the movers did, like who's gonna fix that? Who's gonna pay for that, right? At that point in time, I gotta make a call to Liz and be like, hey, there's a hole in the wall. We need to figure out a solution for this issue that came up during the final walkthrough.
Right.
So if everything, works out at the final walkthrough, then we'll go to the closing. And the closing is
Awesome.
usually with Liz.
Yeah. So just to kind of chime in about the P&S a little bit. So that's always, what sort of our role as an attorney is really to protect your interests as a buyer. So one of the things that we always add in the purchase and sale agreement, that's not in the standard form or ever in sellers forms, because the P&S is actually initiated by the selling side. So we have to make this change in order for you to have this protection. But basically what we change is that the property is to be as it was at the time you inspected.
Mm-hmm.
The standard clause says that it's in the current condition. So then you have to start saying, like, what is current? Was it like when I listed the property? Was it, after you viewed it? So we always make that change of that small little terminology to say when you inspected. So that way we have an inspection report to fall back on and say, okay, you went to walk through with RJ, the movers created a hole in the wall. Obviously, if there was a hole in the wall, the inspector would have noted it on the inspection report. This is not in the same condition. You seller, it's your responsibility to fix, to give a credit, to do something. So a lot of clients, they always ask, so if we find something at this walkthrough, like, can we still close? And you can. It's really just a matter of coming up with a solution that makes you feel comfortable as a buyer. So like I mentioned, for the most part, either collecting money and holding it from the seller's funds that they were going to get from the sale to go and have a contractor come back and fix that. Maybe it's giving you a credit so you can hire your own person. Or maybe it's just something simple like the sellers forgot some stuff in the attic and they have to come back and get it. So there's always ways to still close on time. Obviously, if it's drastic, crazy stuff, then maybe we have to push off the closing, and you would have the right to be able to say that we want to push it until everything's complete. But so long as you have an attorney, obviously representing your interests and making those notations in the purchase and sale agreement. But yeah, a lot of clients, they don't realize that they have that opportunity, and it's huge because, like you said, that is more important, because if you just, don't necessarily, sometimes people, I always get nervous. They're like, oh no, we didn't, it was fine. We went there a couple days ago. It's good. I'm like, oh my gosh, please go back to the house. Just make sure it's still there and standing before we go to record, because, once in Massachusetts, we're a buyer beware state, and the contract says that the moment that the deed is recorded, all of the seller's obligations and obligations to you as a buyer end, unless there's something specifically saying that they're still on the hook for something. So it's so important to have that final walkthrough so you can ensure that there is no problem, because if we sign and we go to record and you decided not to go to the walkthrough as a buyer, and then you discover something that would have been found at the walkthrough, you're out of luck. We can't go back to the seller at that point. I mean, we will ask, but they have all the justification in the world to say no.
And
so
that's
super
why
important.
the final walkthroughs, to me, more important than
Agreed.
Yeah. I had a buyer. I have to tell you guys a story because it's the craziest story. I had a buyer that it wasn't this Christmas, the previous one, 19. They almost didn't do a final walkthrough. They were leaving to go on like a Christmas vacation, a family vacation, like the 24th. The closing was the 23rd. They almost didn't do it. They had to they wanted to change their ticket. And I'm like, I think you guys should just sign and then go. So they go to the final walkthrough, and the seller had moved out like the week before, and there was a storm. And I don't know what happened. There was a pipe or something that also burst. There was ice dams, and literally it was a very, very large house. From the top floor, the whole top floor, water had leaked, and no one was in the house for like 3 days. Water had leaked, and the whole top floor was literally sunk into the second floor. It was literally destroyed. The whole entire house. They went to the walkthrough and saw it destroyed. Like if they didn't walk through, they would have bought it like that. Oof. It was crazy.
Unbelievable.
I couldn't believe it.
Scary. Yeah. No, even so obviously it's always in your right as a buyer to say when you want to do your walkthrough, if it's the day before or the day of, but I'm always an advocate for the day of for those types of reasons, Sophia, because you just never know what happens overnight.
Never
You
know.
never know. Even if it's just a drive-by the next morning and you're like, I'm just gonna drive by and make sure everything looks good. So important. And actually, I think maybe one last question we have time for before we hit. So I think just briefly, maybe both of you want to talk about this, about the whole closing process. Once you have identified a property, how long does the loan take? What do you usually see, RJ, in like closing timelines in terms of the amount of days between?
Yeah, totally. Typically, it will probably take around 30 to 45 days. It can take longer depending on situation of the seller or even the buyer, right? So sometimes buyers have a lease until a certain period of time, and they're asking for maybe a 60-day close because it goes along with their lease, right? Or even the seller has, needs to close on a particular property that is 60 days out. But for the most part, to stay competitive, you want to be at least, 45 days. Right,
Yeah,
Sofia?
and I would say in this market, you definitely, if not working with a local lender especially, you need to ask what the bank turn times are right now, because I will tell you that the appraisers are taking a lot longer than they used to. They're taking almost 10 business days, which is 2 full weeks to even get an appraisal. So you definitely in this market, and it'll get worse as the spring comes. So you absolutely need to talk to the lender you're working with, make sure, ask them how long does it take you to close a loan right now? And it might depend on the loan type as well. So if it's a jumbo loan, if it's a government loan, if you're doing a condo, please definitely ask what the turn times are to your lender, because it could take up to 45, maybe even 60 days to close on certain loan programs. So definitely want to ask the bank right now, what their turn times are and how quickly they can do it. I mean, I had a client that I just got to this morning that Bank of America told them they needed 60 days to do the loan. Wow. And I could do it in 30, but so definitely want to ask to make sure you're not in a bad situation after your offer gets accepted. And you can't close on time.
And just to add on to that, I mean, that makes your offer more competitive. For example, I can tell Sofia, please call the listing agent, call the seller agent, and explain to them that we can close within 30 days or 45 days or whatever the case may be. And that gives the seller or the seller agent more confidence to accept the offer prior.
Right, definitely. And I just want to make one little quick note, because I've been getting asked this quite a bit about rates and when you can lock your interest rate, because they're low now. You can't lock your interest rate until you have an accepted offer. So, because the rate is attached to the property address, not you as a buyer. So in the olden days, you actually could do that. We'd approve you for 90 days, you'd lock in your rate, and you'd have to go find a house. But now that is not the case. It depends on the property type, how much you're putting down, what type of interest rate you're going to get. So you can't lock your rate until you have an accepted offer.
And pre-approvals are still good for 90 days, correct?
Yeah, 90 to 120, depending on the program. Yes.
Cool.
That's awesome. So much good information, guys. And I feel like just to kind of leave everybody with just one little tidbit, like who you work with matters. And it's so important to have that sort of team where, if RJ has a client, they're excited about a property, they've already been pre-approved, but maybe they want to get, submit an offer with the loan amount specifically tailored to the purchase price that they're working on. Sofia can get that updated. Like all of those little things that can just put basically like the bow on the offer makes a huge difference. So for anybody out there who are looking to buy or sell, please reach out to RJ and Sofia and myself if we can answer any questions at all. I am tagging everybody here, so if you do have any questions, you can direct message us. And with that, RJ, any final words?
Hit me up.
That's right. And I think we will be doing another one of these next week with another topic, so stay tuned. And great to see you all.
Thank you. Good to see you.
Thank you, guys. Have a good day.
Thank you.
It's
right.
National Drink Wine All Day today, so drink all wine
all day.
I didn't know that. Done.
I didn't know that either. I got Cabernet on deck.
Perfect. Bye, guys.
All right.